The latest consumer price index numbers were just released, and they show inflation ticked up in April. According to the Labor Department, the CPI rose 0.2% last month and is up 2.3% over the past year. Joining us now is the Hill's business editor, Sylvan Lane, to break down what the data means. Hey, Sylvan. So inflation was up in April, reversing March's decline. While economists expected price growth to pick up again, the numbers did come in below expectations. So what does all this say about the state of the economy?
I think it just goes to show how hard it is to predict where the economy is going right now. Over the past 2 months, we've seen these huge tariff announcements from President Trump. A lot of those tariffs have been increased, decreased, delayed, suspended, moved to other items. It's just been a very confusing time to try to keep track of what's going on in the economy right now. And while no one is upset to see inflation lower than expected, it is becoming harder to figure out where we are going from here.
Speaking of that, President Trump just announced a new trade deal with China. So could we see another reversal in these numbers here in the near future?
So if this trade, if this trade pact with China holds, I like to call it a trade truce because it's almost like you have two people who've been beating each other up for months. You finally pull them apart. Now they've stopped hurting each other for now, but it doesn't mean that the fight is over. So it really depends on what we see over the next few weeks in terms of trade discussions between the US and China. If the US and China can use this truce to create some sort of longer term understanding that leads to lower tariff rates, then that would probably take out a lot of the inflationary shocks that economists, businesses, and even folks like you and I have been bracing for in our daily lives. But if this truce doesn't hold and we see tariffs going back up on Chinese goods again, then a lot of those inflationary shocks are still going to be relevant.
I wonder if there's going to be any impact from what had been in place over the past month or so, or however long these huge tariffs have been in place. Is there kind of a lag time for that effect? And even though the inflation rates may be back lower now, that we're still yet to see the full impacts of what was in place previously and the impact that's had on trade?
There's absolutely very long lags when it comes to how tariffs impact the economy. Now, some of that is just the complicated nature of how businesses make decisions, how long it takes people to react to changes in prices. But another fact of it is just simply how long it takes for goods to go across the ocean from China to the US. While the big tariffs on Chinese goods, as high as 145%, while those were still in place before the trade truce between the US and China, there had been ships that were, waiting at ports, not wanting to unload goods because whoever's picking them up would have to pay a tariff on them. Goods being redirected to other countries so that when they come to the US, they may not be facing the same tariffs. So it's possible that we'll still see some price increases come from the previous tariffs. But again, because the tariff rates themselves have been shifting by the week, even by the day, it's very difficult to know where this is going.
Wondering how the Fed is going to react to this latest news. Jerome Powell has been holding interest rates steady, much of the chagrin of President Trump. How do you think Powell will react to these new numbers?
I'd expect Powell and his colleagues on the Fed who help make those Fed interest rate decisions to feel more confident in their position than maybe even they were last week or last week when they made that announcement in the first place that they were holding steady. Powell's argument was there's a lot of uncertainty about the economy. Inflation is low. The job the job market is still pretty solid. The unemployment rate's low. So it doesn't make sense for the Fed to do anything big in terms of its interest rates while there's still so much we don't know about the economy. And the economy itself right now is doing okay. So I would expect Fed officials to see this as more reason to be patient, to wait to see where trade policy settles, if it does settle at all, and then go from there to make decisions based on what they're seeing in the economic data.
So much we don't know, so definitely a need to continue following your reporting. Sylvan Lane, thanks so much.
My pleasure.